Good afternoon, everybody. Welcome to Trader Merlin Show. It is your Wednesday afternoon edition. Yes, Wednesday afternoon edition. Let me real quickly make sure my speakers are up to snuff because I had to restart my computer. Usually that changes things, but most likely my microphone is good. They're at 100%. Perfect. All right. Shout out to all of you that came up to the Los Angeles Center. I got to meet some faces, put some names to faces, if you will, or faces to names. I came out to the Woodland Hills Center last night for my 2 presentations on digital assets. It was fun. I really enjoyed it, and the more I do that presentation, the more I'm excited about what the future of digital assets, cryptocurrency, and just our financial system upgrade looks like. A lot of what's presented in the course that we created for Trading Academy is rooted in fact. It's rooted in the technology that exists today, but also there's a lot of speculation about how that technology is going to grow, the impact it's going to have, not just on financial markets, but day-to-day living. So it's always fun to kind of put on my Star Trek hat and think futuristic. If you look at some of the things that Star Trek came up with back in, what was it, the 60s, 70s? Remember the communicator, the flip communicator? That was the Motorola StarTAC phone. They were way ahead of their times, and I think that a lot of this stuff that we talk about digital assets is that final frontier of financial and monetary evolution. All right, so let me go back to what we talked about last on Monday's show. Of course, the flip-flopping of Trump and peace talks. Of course, that happened on Tuesday. Who knows how this is all going to pan out? More volatility. But I mentioned that today I was going to do a show on DeFi, and it was spurred by this question from Ed up in San Jose, who's been patiently waiting for this one. I'm sure you have, Ed. He says, I'd like to hear more about Hyperliquid, how it works, how retail traders can access it, what safeguards, if any, are employed, and whether you think it is a legitimate trading platform. Okay, so before I get into Hyperliquid or any of the DeFi marketplaces, I'll do just a couple minutes explaining what DeFi is, so that for those of you who may have no exposure or experience in the digital asset space, you'll have a better understanding. Most of our financial systems have been centralized, meaning you have a controlling group that controls all the data, the services, and you can look at any business today like Amazon Web Services would be a great example. So if AWS, if you do something and you're using AWS, they can immediately snap the fingers and you are cut off from their services. They could cut me off from buying goods and services. Wells Fargo could block me from becoming a customer or freeze my accounts. eBay could say I'm no longer allowed to bid on their site. And this centralized control is part of the risk, which has given rise with digital assets to this thing called DeFi. So I'll explain to you at a high level what DeFi is. There are certainly some great opportunities for you in DeFi. However, as we all know, when you take on greater rewards, you're going to have to take on greater risk. So let's dive into first part here, which is looking at that centralized finance model I just mentioned, where you have one entity in the middle who is controlling everything, right? And that could be your bank, that could be a grocery store. I mean, they can always deny you service. So there is a limitation of access. As long as they say it's okay for you to access that good or service, then fine. But that controlling entity in the middle has a tremendous amount of power. If you look at decentralized finance, it's kind of difficult to explain this to someone who doesn't understand blockchain or cryptocurrencies, but you notice the interesting part here is the individual in the middle. When I show that DeFi graphic on the left, there is no central hub. There is no intermediary that is the almighty that has the power. You notice that everybody here has an equal shake. So the way that DeFi is represented here is everybody there has a say in what goes on, but no one person dominates what goes on. So if there's an upgrade to the system or if they want to censor an account, they could do things like that, but the majority of the network would have to agree, yes, let's censor this account or let's freeze this transaction. So DeFi really puts it back to the Robin Hood type of power to the people. Now, of course, in that DeFi scenario on the left, some of those individuals may have more clout, may have more power, which we'll talk about here in just a little bit. What does Wolf say? Isn't Trump suing JP Morgan for $5 billion for cutting him off and through central hubs or just JP? I believe that's just through JP Morgan. Isn't he going after? He's always suing somebody. I know he's got a bunch of lawsuits out there, so I don't know off the top of my head, Wolf, which ones are which, but I think he was suing the Justice Department as well or something like that. I don't know. Lawsuits abound. Correct. It was a debanking thing for him and his family, and he may have a rightful claim, but remember, that's the bank's discretion. A bank does not have to give service to everybody. They reserve the right to refuse service. Now, who knows if that's constitutional or unconstitutional? I just don't know. That's not my area of expertise. What I do know is that the bank does have the power at any moment, whether it's President Trump or Lori, Dan, or myself. They have the power to not only censor our transactions, but limit our access to the entire system that they offer. So if JP Morgan's got some great fund or investment I want to buy into, JP Morgan can say, no, well, you're not permitted to access that. And I have to go through a whole process to try to figure out why and maybe beg for access to that service. But that's just the danger of centralized finance. So most crypto that we look at in my crypto program is going to be revolving around decentralized finance. And it opens up a whole different world of access because of regulatory pressure. So I'm going to go through here briefly and look at use cases for DeFi. Like, well, what kind of things could you use decentralized finance for? Well, lending and borrowing is one of the big use cases. And here's where we, as average consumers, get totally screwed by our banks. Sorry for the vulgarity, but that's the truth of the matter is, if I go right now to JP Morgan Chase, I can make 0.01% interest. They're going to take that money and lend it out to somebody else at 7%, 8% for a car loan or a home loan. That net delta there, difference between what they're paying me and what they're getting in return, is just pure profit. And it's almost risk-free because they're protected by the FDIC. With DeFi, there's dozens, if not hundreds of sites where you can go and take your crypto and you can lend it out. You could take your crypto and start earning yield on it. So I would lend it out to someone else who wanted to borrow that cryptocurrency for whatever reason, not my discretion. A lot of times those loans will be collateralized. So when someone borrows my crypto, they're going to collateralize it so I offset some of my risk. And then there's rules put in place that if the price of that crypto falls a certain amount, they're automatically liquidated and I get my money back. So protection methods are put in place here on DeFi, but allows you to become your own lender as opposed to giving your money to a bank and letting them do the lending and make all the money. Just that statement right there should be very clear to all of you why banks are nervous about this, right? Banks now realizing that they have a massive increase in competition. And a lot of the people I know in the crypto space have pulled most of their money off of out of their bank accounts because they're making more than that 0.01 or even 2 or 3% that some of the banks offer. You can also borrow this way, and this is rather interesting. So as many of you know, I have a good amount of Bitcoin. If I wanted to go buy a new property, and I have been looking at potentially buying another property. Remember, I think you guys might remember back in 2020 when I started the show, I made an offer for a house up in Big Bear. It was just a ridiculous time to be buying, and I backed out and said, nope, not interested. I'm still interested in buying a place up in Big Bear, maybe even Mammoth, someplace with a good snowfall. Certainly not this year. But I don't want to, if let's say I have $1 million worth of Bitcoin and I want to buy a house. We're not at the point today where I can take that Bitcoin and say to the realtor, I'll pay $1 million worth of Bitcoin for the house. Most people aren't going to accept that. So my other choice is I can sell my Bitcoin, take a monstrous capital gains hit, and then with whatever's left over, let's say it's half of that, $500,000, now I can use that to buy the home. But I don't want to do that. I don't want to sell my Bitcoin. I don't want the capital gains hit. So what could I do? I could go to different lending protocols and I can deposit my Bitcoin and I can borrow USDC, which could be converted into US dollars. And then I could use that cash to buy the home. So I could use DeFi as a way to use my Bitcoin as collateral, take out a loan against that Bitcoin. So let's say I put up $1 million worth of Bitcoin, but I just need $500,000 loan. Fine, easy. That way I'm protected because unless Bitcoin falls 50% or more, they won't need to liquidate my Bitcoin. So I'll do a leveraged position. I borrow against that, and now I will have the money I need for that home without selling my Bitcoin. And the other way it goes is if JP Morgan, there are some firms now that will allow you to transfer your Bitcoin over to, let's say, JP Morgan, and they will use that and issue a loan against that, collateralize it. So the banking industry realizes that DeFi is a threat here, so they're trying to offer some of those same services. Athena says, I can't wait for this to become the standard way to buy a house. I think it's going to be much sooner than we think it's going to be. It already feels like it's moving much faster, and the major financial institutions are accepting Bitcoin as collateral, but not a lot of the other cryptos yet. DeFi allows you a way to use almost every crypto. There's a market for almost everything out there. Obviously you want to, most likely you're going to get the best deals with the big stuff like your Ethereum and your Bitcoin and your, Avalanche, Solana, the ones that are popular. So that is your first big use case here, would be lending and borrowing, which I think is huge in DeFi. Number two is going to be decentralized exchanges. Now this is what Ed is referencing with this exchange called Hyperliquid. And Hyperliquid it's a blockchain that's built to have decentralized products built on top of it. So HYPE is the symbol for Hyperliquid. And what Hyperliquid intends to do is build a blockchain, which they've done, that is very fast. I believe you can get up to 100,000 transactions per second on Hyperliquid, which is way faster than Bitcoin or Ethereum or pretty much any other blockchain. But it's designed to be an exchange-based blockchain. So you can build different exchanges as you see fit on top of their infrastructure. So a decentralized exchange is where you could do everything that you would do at something like Charles Schwab or Fidelity or E-Trade. You can do all the same financial services, transactions, plus much, much more. Because remember, when I go to Charles Schwab is under very strict U.S. regulatory guidelines. These DeFi exchanges don't necessarily have to adhere to the same thing because there is no centralized entity for regulators to go after. It is decentralized. It's all over the place. So Hyperliquid, which we'll look at here in just a minute, allows you to trade stocks and futures. You'll see some sites where you can trade options. All sorts of derivative markets are in place. But it opens up the doorway to us to buy into or trade markets that don't exist today in the U.S. market. For example, Solana futures don't exist. Ripple futures don't exist on a centralized exchange in the U.S. But I can go out there and I can trade those right now on DeFi marketplaces, and I'll show you how we do that. March says, can you buy stocks? Yes, you can buy them as perpetual futures. So that basically it's a derivative. It's futures products. Merlin, if that bill goes through, won't Bitcoin, Ethereum, etc. be centralized? Therefore, won't? No, definitely not. So when that bill goes through, which you're talking about the Clarity Act, Wolf, the Clarity Act is just going to outline and define what's a security, what's not, and put more, obviously clarity is the name of the act, but put more clarity on what the rules and guidelines are for specific cryptos. Bitcoin can't be controlled by any one person. It's too distributed right now. There's so many people own Bitcoin that no one person can call the shots there. If someone were to get 51% of the entire Bitcoin network hashing rate, which would be hundreds of billions of dollars to get 51% of that hash rate, then they theoretically could control Bitcoin. But the industry would make sure that doesn't happen. No one wants to see anyone have 51% of Bitcoin or the system integrity decline significantly. Same thing for Ethereum. Ethereum is one of the most decentralized cryptocurrencies out there. So no, they do not become centralized. They just have rules put on them about what they can and cannot do. Good question. So we'll look at decentralized exchanges here in just a bit. I'll take you out to a few of the different ones so you can see kind of what they do and how they function. This is one that I like, probably the one I like the most, which is yield farming and staking. So we mentioned at the top that with DeFi, I can take my assets, whether that's USDC stablecoin or Bitcoin or Ethereum, and I can use that. I can lend it. I can borrow against it or lend it out to somebody and earn yield. But there's also yield farming, which involves some pretty complex topics like liquidity pools. I won't go in depth on that. We'll save that for the crypto program. But liquidity pools are where you deposit a certain amount of cryptocurrency, and anytime people make transactions in those instruments, you get a percentage of the transaction fees. So it's a way for you to earn income there. Staking is another one that we talk a lot about in the crypto program, which is the protocol like, let's say, Solana. Solana has built-in rewards for people who participate in the security and safety of the network. And if you want to be a part of that, you can earn roughly 6% now, I think maybe 5.5%, 6% per year in Solana just by locking your Solana in the network and staking it. Now, some of these are directly into the protocol. Like Solana, you go directly to it and do it, or you can use third parties or DeFi sites to stake through and earn yield. So the top three here, at least the first one and the third one, are all about you taking your capital, your crypto, and making money with it. Our fourth one is the ability to trade markets that don't really exist today, as I just mentioned. So, for example, I'll go over here and show you, this is one called DYDX. So I'll go to, let's go to Deribit. So here's Deribit. And I know we got some options traders in the house, right? Probably a lot of options traders. If you click over here on options, you notice that I can trade options on Bitcoin and Ethereum. And most of you are like, well, who cares? There's IBIT, there's ETH, I've got Bitcoin futures and Ethereum futures. Yeah, but do you have Tron futures? Do you have Ripple futures, Solana? These are Avalanche. So you have Avalanche, Bitcoin, Ethereum, Solana, Tron, and XRP options that you can trade, and you can trade them out all the way to the end of the year. Now, liquidity might be an issue, right? Open interest could certainly be a problem here, but the point is you can now trade markets that you didn't have access to with traditional finance, with centralized finance. This here is a DeFi options site. You can also go out here and trade futures. And you can see here I've got Bitcoin futures, Solana futures, a lot of Ethereum. There's Ripple, Algorand, Uniswap. I mean, nobody has Uniswap futures. Yeah, Wolf says, wow, now I can really get in trouble. Yeah, you can even trade the Trump coin, which we know is a joke. I mean, that thing serves no functional purpose and is going to go to zero at some point. But you could trade futures on that if you wanted. Hey, short it. But the point I'm getting at here is there's a lot of different marketplaces that did not exist in a centralized or traditional finance world, and those have come up because of DeFi, and I'll dive deeper into that as we go here. Obviously, stablecoins are a big thing. Stablecoins are pretty much the backbone of DeFi. When you look at DeFi, most of it is built using smart contracts. So when we make transactions in DeFi, it literally is a piece of code that says, all right, swap this token for that token, or put the terms and conditions of that options contract in a smart contract. And that is a basically self-executing line of code based off the time parameters. So smart contracts are what make all of DeFi function. Without it, we don't have DeFi. So again, smart contracts become very, very important here. And there's also some kind of out of the norm products. For example, there's insurance products that you can get in DeFi that you wouldn't normally get. You can get portfolio management. I'll show you a site here in just a minute where people have created very complex portfolios of cryptocurrencies that you can buy into. You can basically say, oh, I like how this one's constructed. I'll put 10 grand into that. And you just deposit it right into that account. And now whatever the performance of that is, you get the returns, and whoever created it gets a small percentage of the profit. So if you are a great picker and you want to build a big portfolio and have people buy in, that's another way to do it. And some of them have pretty outlandish returns. Remember, with DeFi, you're not constrained by the typical regulatory rules. For example, if you trade stocks here in the United States, you know that you get 2-to-1 overnight and 4-to-1 intraday. If you're trading futures and options, I'll ballpark and say you're going to get about 10-to-1. If you trade spot Forex, you're going to get maximum 50-to-1 in the US. Now, if you are using DeFi, I'll show you a site right now where you can get 40-to-1 leverage on Bitcoin. Now, I don't know who the heck needs 40-to-1 leverage on Bitcoin, but man, if you have a great trade set up, whether it's coming into a man zone or supply zone, or you really have good conviction it's going to go one direction, using that kind of leverage can really impact your rate of return, but as we all know, it could significantly destroy your account if you're on the wrong side of things. Let me get to some questions here. Let's see. Dwight, good question. He says, why would the powers that be, like banking systems, be willing to give up their power to DeFi? They are not willing to give up their power, Dwight. This is a battle. This is an absolute fight. Many of these products that we're going to look at are not attached to the United States. Matter of fact, if you are in the United States, there are some jurisdictional restrictions. A lot of this stuff you are technically not allowed to access, and you'll see that when I show you some of these here in a second. However, we all know there are ways around it, and I would just say, as a very cautionary note, if you choose to go around the warnings issued by some of these DeFi sites, that's on you. There may be some legal ramifications here. I am not a law expert, but you may be violating some law by accessing some of these sites. Some of them you can do without the need for permissions. But for example, there's a thing called perpetual futures. I know we've got a lot of futures traders here. One of the big problems with futures is you got to keep rolling them, right? Oh, great, I got the December S&P. Now I got to go buy the next contract, right? It's always just kind of rolling, and there's liquidity periods where all of a sudden it gets wonky. You got to make sure you roll over in time. It's a pain in the butt. Perpetual futures are basically a futures product. It's a derivative that never expires. So I could buy a perpetual Bitcoin future, and it's just like buying the underlier. I get to hold that one forever, but I get leverage on that product. So it again has created new products, and perpetual futures are not allowed in the US. That's the main reason that this stuff I'm going to show you here is blocked. Perpetual futures are not allowed yet. My guess is that's because TradFi, traditional finance, is going, oh, heck no. No. This is our market. We're the ones that control the future. You think the CME and the CBOE and the NYMEX, want to watch their futures business disappear? No way. These are historical legacy institutions with deep pockets and political connectivity, which is one of the reasons I think you're seeing the Clarity Act stall. It's not just the stablecoin payouts that's causing it to stall. It's the fact that this fundamentally threatens traditional finance on a massive level. Massive. Atticus says, I'll never have my contracts that long enough to roll. Good. Well, some people love to buy leaps, right? Well, now you could just buy a perpetual futures contract and just hold it forever. All right, so that's some of the use cases. Now, Marcia asked, what are the risks? Let me talk about the benefits, and then I'll talk about risks. Benefits are, number one, transparency. These are all done on blockchain, and those transactions are going to be open and transparent, meaning you can see pretty much everything that goes on behind the scenes with a transaction. You can see where liquidity points are, liquidation levels are. So if someone takes out a loan or borrows crypto, that is all visible in the smart contract. Now, I'm not smart enough to be able to decipher that, but the fact remains, it is visible in the smart contract. You can read everything, totally transparent. Number two on this list is market access. One of the big differentiators here, and this is where I think some of the problems and risks arise with DeFi. Market access. If I want to trade futures, I have to go to a US broker. I have to open up a futures account, a specific futures account. I have to give them my name, address, social security number, birthday, all that personal information, because they need to run KYC and AML. That's Know Your Customer and anti-money laundering. That can take days to get through and to get your okay, but the fact is they know everything about you. It is fully documented who you are, where you are, etc. If I want to open up an options account now, I have to go and fill out the same paperwork, maybe even the same broker. But I got to do this all over again. And every account has a different, set of requirements I need to fill out. Some markets I may not even be able to get access to. For example, different levels of options. I might not be able to get level 4 on options, but I can qualify for level 1 and 2. With DeFi, because you have no central authority saying, hey, you can't do this, it opens up access to everyone. And as you'll see here, I can go to different DeFi protocols. All I have to do is click a button that says connect my wallet. To a DeFi exchange, all they care is, do you have a wallet? And is there money in it or crypto in it? If there is, then you're welcome to trade here. Whereas the United States is, the US is like, how old are you? Are you Caucasian? What's your religious background? It's almost ridiculous what these firms ask you when you're opening accounts. With DeFi, there's none of that. It is just, do you have money? Cool, you're welcome. Now, I think you guys can see what part of the problem is there. There is no KYC. There is no AML. So this does open up for illegal activities, or let's just say bad actors, to be trading on these marketplaces where they wouldn't be able to in the US market. So just throwing that one out there. It's not all roses. That is legal, asking all those questions. Probably not the religious ones. I was getting a little over the top. I mean, obviously not going to. They do ask what your ethnicity is. You don't have to. Are you a folder? No, they do ask if you're Caucasian. They ask, are you Hispanic? Are you Black? Are you Caucasian? But it'll say down at the bottom, no reply. You don't have to answer, but they do ask. Yes, they do. And they'll say that's just for survey purposes. It's not going to limit your account access. Yeah, who knows? All right, I also put consumer access, because this is just as simple as having a wallet like MetaMask or even a Coinbase wallet. Anyone can access this from anywhere in the world. And I think this is a really big point, because it brings in financial inclusion into the rest of the world. For everyone here, we're all living in a major developed country that has traditional financial markets, and most of us have some capital to invest. A lot of people don't. And this does allow for them to participate in these markets. So I put consumer access is also very important as a benefit. And finally, yield opportunities. I think that at the core, the biggest challenge we're going to see is how the banks deal with this, because the banks are losing money. The banks will be losing a lot of money, and I think not now, but over the next year or two, we may be looking at these financial institutions as potential shorting opportunities, because if people knew that they could be making 10, 12, 15 times more interest by doing things through DeFi in a relatively safe environment, I think a lot of people will start to move their money off of the traditional investment vehicles, and banks are going to start to feel that pain. So those are your benefits there: yield opportunities, as I mentioned, staking, liquidity pools, etc. But there are risks, as Marcia has asked. And what are those risks? Smart contracts. These smart contracts are vulnerable, and this scares the daylights out of me. I'll be honest. Here's why. You could go onto YouTube, and there's a bunch of guys that post these videos of hacking a smart contract. So for example, there's a thing called a bridge. And Bitcoin's network doesn't talk to Ethereum's network. They're written in different languages. They have totally different technology behind it. One's proof of work, one's proof of stake. They are absolutely different. So what happens is, how do I get to use my Bitcoin on the Ethereum network? Let's say you've only got Bitcoin and you don't want to sell it, but you want to use it on Ethereum's network. So what happens is there's a thing called a bridge. What a bridge is think of it like a custodial account. You take your Bitcoin or piece of a Bitcoin and you say, I'm depositing it into this smart contract. So I got one Bitcoin, I put it into a smart contract. That smart contract issues a token called WBTC, the W standing for wrapped. What that means is you now have a token that's worth the value of one Bitcoin that is built on the Ethereum network. So now this wrapped Bitcoin will trade on Ethereum's network like any other Ethereum product. Your Bitcoin is held in that smart contract think of it as collateral. So if the value of that Bitcoin drops, the value of your wrapped Bitcoin drops. If the value of your Bitcoin grows, it grows. So it's just a way to move your Bitcoin onto Ethereum without having to actually move your Bitcoin there. It basically creates a separate token for you. What's the risk? That's called a bridge. When you deposit your Bitcoin into the smart contract and it issues a token on Ethereum, that's called a bridge. It's bridging the gap between the two blockchains. However that smart contract is written is the risk. It may be very well written, meaning it's bulletproof, or it might be poorly written. And if you look at the search results, smart contract theft is one of the highest areas in crypto where people lose money. Smart contracts get broken into all the time. And one of the videos I saw a couple years back was a guy took a smart contract from Ethereum. Remember, it's a transparent blockchain. You can see the smart contracts. So he took the smart contract, he put it into ChatGPT, and he said, find the vulnerability in this smart contract. Like line 79, you could run this attack. Or line 85, you could do this. And when I saw that, it made me extremely nervous. Is a good hacker, and I'm not a hacker. I'm not even a programmer. I'm a techie, but I don't know code at all. I have friends who know code, and they nod their head every time I bring this one up. If you're really good at hacking, you could find vulnerabilities in smart contracts, and someone could go in and steal that Bitcoin that's in the smart contract and take it out, and now it's theirs. So, is that guy in jail? No. There's people do this all the time. Atticus says, so don't use smart contracts. You don't have a choice. If you want to use DeFi, if you want to use any of these sites I'm going to show you, they are all built with smart contracts. Now, I'm a little bit of a worrywart, right? I'm a little bit of an overly cautious person here because I've seen so much theft. The major players, the major DeFi sites have third parties going over their smart contracts, checking for vulnerabilities and auditing them to make sure that they're safe and secure, which I think is a very valuable thing. Dan, is that my Russian hacker right there? Is that what you're telling me in Russian? It's like I'm going to hack your tokens. So just keep that in mind. It's definitely one of the areas of risk and makes me nervous. Dan says, I think decentralized finance and tokenization in the future. I agree. But again, we can't look at it blindly without saying, let's look at the risk. Number 2 here, and this is a major one, regulatory pressure. My personal opinion is our politicians are too stupid to understand this stuff. Sorry. I think that the politicians are too stupid to understand this stuff. So what ends up happening is you're going to get the banks lobbying aggressively against this. What I just showed you very quickly and briefly in explaining here, I think you would all agree fundamentally threatens banks and financial institutions. It fundamentally threatens JP Morgan, who issues investment products and services. It fundamentally threatens the New York Stock Exchange, the NASDAQ, any exchange where these products are traded, because now, instead of me going to the CME and trading Bitcoin futures contracts, I'm going to go over to a site like Hyperliquid or Deribit or PancakeSwap and now trade a futures product, and that exchange makes no money. They don't get any transaction fees. So you can see it's siphoning business away. So if I'm NYSE or CME or JP Morgan or Bank of America or Wells Fargo, I'm on Capitol Hill spending an ungodly amount of money to say, this has got to stop. You need to regulate this. So it makes me a little nervous, the regulatory pressure that's going to be put on this industry. And right now, no big deal. I don't think the spigot gets turned off instantly and all of a sudden your money disappears. But they've already done certain things to prevent you from using these sites, and I'll show you here in just a second. And then I put risks, rug pulls. I think I talked about this with you when we started, when Donald Trump was announced as one of the major holders of World Liberty Financial, right? World Liberty Financial was a product that was created by a guy named Chase Hero and somebody else. Those guys started a decentralized finance exchange a couple years earlier with bad code, and it was hacked, and millions of dollars were stolen from it. And those same two guys are creating World Liberty Financial, which was one of the reasons why I would not touch it with a 10-foot pole. So rug pulls are where people create a product, a service, get a bunch of people to buy into it, and then they disappear with all the money and all the profit. So to me, that is one of the big risks here, and that just comes down to you doing research and making sure you don't get caught with something that you got overly hyped up by some online influencer, or you saw it on X or Instagram. Some guys are going to buy this thing. Do your research, right? That's one of the main reasons I built my crypto program, is to do that research. So let me go and show you, going back to Ed's question here about Hyperliquid. We'll look at a couple different exchanges, then go to why Hyperliquid is so important and what it's doing. All right. So let me go over to some other exchanges. Like, here is an example of a DeFi site. This is called PancakeSwap. So these different DeFi protocols, they're built on different blockchains, right? And I mentioned to you, you have blockchains like Cardano and Avalanche and Algorand and Ethereum and Solana and Binance. This one is built on the Binance blockchain. And most DeFi has very elementary things. Yes, Marsha, I use PancakeSwap just because Cake tokens was one that I was using for a long time, and transactions on Binance's chain are some of the cheapest out there. So one of the things you can do is you could take one coin. So here you can see I'm swapping BNB for Cake tokens, or I could click here and swap it out for all kinds of Husky Seal or Inery or Epax. I have no idea who these projects are. Remember, there's over 35 million cryptocurrencies, guys. 35 million. So I could just click a couple buttons and buy into a token or a project that I'd never heard of here before. And for those of you who are trying to buy into exotic cryptocurrency, right? That's not, I'm talking outside the top 10 or top 20. When you buy exotic, sometimes they're not listed on Coinbase or Binance or Kraken or Gemini. They're not listed on these big centralized exchanges, so you have to go to a DeFi marketplace to buy them or swap for them. So this is PancakeSwap. That is a typical feature there, is swapping. But you notice here you got perps up at the top. If I click on perps, look what happens. Oh, service unavailable in your region due to region regulatory requirements. We are unable to provide service for your region. Please access from another location or check your settings. Meaning, just do a VPN, right? Use a VPN. If you want to use a VPN, remember, it says here, due to regional regulatory requirements, my concern is if you use a VPN, you're breaking a law. So I think that is you got to be very careful here. Let's go out to DYDX. So DYDX is another one. This is probably Hyperliquid's biggest competitor. But if you go over here, I can trade. And you can see up at the top, it says, perps are not available in your country or region. Spot trading may still be accessible. Please note that access from certain jurisdictions, including those subject to sanctions or other legal restrictions, is prohibited under the terms and conditions. So they threaten you there, and they'll basically say, hey, we can close out your positions anytime we want. Big Bry says, now I remember when there were only 1,000. Yeah, And actually, let's just go look at it right now because it's wild how quickly this changes. So I'll go to CoinMarketCap. Right at the bottom on Coin. Oh my goodness. I did this class. I did a presentation in Vegas and there was 36. I don't know how many weeks ago I was in Vegas. It was less than a month ago, right? Guys, look down here at the bottom. Cryptos, 47.05 million. I know it's really hard to see, but in the bottom left-hand corner there's 47 million different cryptocurrency projects. I mean, that is absolutely ridiculous. I mean, people are just creating them left and right. So you got to be even more careful now than ever that you're buying into some kind of scam, some rug pull, some garbage thing. That's wild. God, man. 47 million. Mark the date. So, okay, I'm going to write this down. It's 47.05 today. This is Wednesday. Let's see what it's like tomorrow. We can get an idea of how many are created in a day. My guess is this will probably go up by 1 million or 2 in a day. Anyway, let's move on from that. So I was on DYDX. So DYDX, you notice this looks just like TradingView. You've got the same basic charting functionality. You can see your positions. Most platforms look very similar. You got your order book out here. And you can see here, there's the different contracts or currencies I can trade. And notice this one's giving me 50 to 1 leverage with no fees. It sounds great, but 50 to 1 leverage, as you know, will tear you apart. 24 hours, this has traded $37.4 billion worth of value. I mean, these are not like small exchanges, guys. They're doing massive volume. Big Bry says 99% will go to 0. I would add a couple nines. I'd say 99.99. 999. Yeah, only a few. Oh, yeah, most of them are literally going to disappear. So I have the spot market, which is actually like buying Bitcoin outright. You have a bunch of other different marketplaces that you can trade and use leverage. I have portfolios of mine, but I can also go to vaults, which are usually vaults that people have created. And let me go here to, let's show you, I already showed you the options. So let's look at Hyperliquid, since this is the one that Ed wants to know about. You know, one of the big reasons this thing is taking off is, where can you trade crude oil Sunday morning? Let's say Saturday night. Let's say it's Saturday night, 8 p.m. You guys type in the chat, where can you trade crude oil Saturday at 8 p.m.? You heard about some crazy thing. You saw a refinery explode near your house or whatever the case may be. Where can you trade? Hey, Big Ab, good to see you. Mahalo, hope all the rain stopped over there. It looked like it was getting wild in Hawaii. Big rain and flash floods. Hope you're doing well. That's it, Dan. Most people have no idea. And the reality is, there wasn't a place for you to trade on Saturday at 8 p.m. Didn't exist before. What's happening now is, Robinhood, I don't think they do yet. There is some 24-hour trading of equities, so maybe you could trade things like USO. But if you look here, I'm clicking on over at Hyperliquid, and notice not only do I get to trade oil, but I get to choose. I've got West Texas Intermediate, it's WTI. I also have Brent. So depending on which oil you wanted to trade, you could trade those different ones. And oil, in the last 24 hours, has traded 594 million. This is actually much higher on the weekends. But this trades 24 hours a day, 365 days a year. So now you have access to markets when the markets are closed. So you can see, I know it's hard to read, but I've got the typical Bitcoin and Ethereum, fine. But I've got crude oil, silver, West Texas Intermediate oil, silver, Brent oil. I've got the S&P 500. You've got gold. You've got, there's stocks on here like Circle, natural gas. I've got Tesla, Nvidia. So these marketplaces are opening up doors to you to kind of have 24 access to the markets, which I think is a very valuable resource, especially when we have such political turmoil going on around the world. I mean, you remember Saturday, Trump saying you've got 48 hours to open up the Straits of Hormuz and we bomb the heck out of all your energy infrastructure. Just start shorting the market, You wouldn't be able to do that with traditional investment vehicles. So I think that's one of the reasons that DeFi and Hyperliquid in particular, for Ed's question, is getting so much attention, right? It allows you to access all these different markets. Now, this is just the trading side of it. And again, it says here that certain jurisdictions I'm not allowed to, but all I have to do is literally connect my wallet. If you had a VPN, you could do that, but again, that is on you. Be careful there. Maybe in the future on Coinbase or Kraken. Yeah, Joe, there are futures products on Coinbase and Kraken. Let me, just for argument, not for argument, there was no argument going on here. Let's go Kraken. Let me log into Kraken because Kraken I'm not sure on their time constraints, meaning is it 24 hours and over the weekends? But let me, I got to log in here, so just bear with me as I try to talk and log in with my two-factor authentication over at Kraken. I have so many two-factor authentication codes here, but all right, this should do it. 3. All right, so here's Kraken, which is not DeFi, right? Kraken is centralized. Kraken is centralized. That is controlled by Kraken. All right, so we go over here to their trade futures, and you'll notice they do have the traditional CME futures products. Now, I'm willing to bet you that this is specifically connected to regulated exchange. You can see that all this stuff here is normal futures products. And the reason for that is Kraken bought NinjaTrader, which was a futures exchange. But there's no exotics here. I don't see Solana futures. I don't see Ripple futures. This is soybeans and copper. So this would just allow you to trade standard futures products there, not exotics or perpetual futures. So we don't have perpetual futures yet. Nick says it will force the U.S. to go 24/7. It's not even really a question of forcing it, Nick. The NASDAQ has already filed for permission and received permission to go 24/7. I think it's 24/6, but that will be later this year from what I'm reading when they'll start to implement it. And again, we'll do a whole nother show on that because it's going to be very interesting to see how the trading day shapes up. What's going to be different about trading when we go 24 hours? It will be a very different world for sure. All right, well, my wife just built a fully automated trading bot using Tasty Trades API, and she used Claude Cowork to do it. No dev background, just her. Wow, phenomenal. Let me know how that works out. You hear so much about AI systems and this and that. I think there's certainly an advantage to using an AI system to trade for you. Main reason is it removes the emotion. As long as you tell it what to do and you tell it correctly, then you automate it without having the emotional attachment. I think that for me personally, I don't think that AI has that human intuition yet, that ability to judge a market as it's changing or turning and the ability to make those on-the-fly decisions. I think it's much more reactionary to data. But hey, if you can build something that you turn on and it makes you even $1 at the end of the week, that's a start. And if you can consistently do that and improve on it, hey, goose lays the golden egg, right? Listen, help me out here. If the markets are closed, what are you actually trading? You're trading a futures product. You're trading a futures product that's driven by supply and demand. Now, one of the main reasons that Hyperliquid has become so popular isn't that it's DeFi. There's hundreds of competitors in that DeFi space. What makes Hyperliquid so popular is its liquidity. So Hyperliquid has become one of the most liquid markets for after hours trading. They have massive volume here. Let's go back to trade. And you can see here some of that open interest. The Bitcoin 40-to-1 leverage Bitcoin product. Right now you can see the top line here. It says BTC-USDC. So that's Bitcoin versus US dollar stablecoin. 40-to-1 leverage. Open interest right now, $1.78 billion on that bad boy. Crude oil. Right now, open interest is 202 million, so not that big. But over the weekend, this number actually gets pretty big. Pretty big. Because there's nowhere else to trade it, right? So you're trading a futures product that is a perpetual futures product based off of supply and demand. And the liquidity is so big here. And why is Hyperliquid getting all the attention? Why is Hyperliquid rising to the creme de la creme? Oh, did I bring my notepad? I took notes earlier on it, but they have the former CEO of Barclays. They've got the old CIO of Barclays. They have the former chief operating officer of the New York Stock Exchange. They have the former head of the Boston Fed. So you got a Federal Reserve banker on your board. They have the elite of elite on their board of directors. Now, when you have like PancakeSwap. PancakeSwap doesn't have any of that stuff. It's just a, fly-by-night DeFi marketplace. Hyperliquid is saying, we need to bring in the top guns because what we can probably do is we can build relationships with these exchanges so that we don't get in the firing line of them, and figure out how we can work together to use Hyperliquid. And who knows, maybe what happens is New York Stock Exchange buys Hyperliquid. One of the big things here that I have an issue with Hyperliquid, and this is for Ed and anybody who's looking at Hyperliquid, Hyperliquid is not DeFi. They call themselves Decentralized Finance, but Hyperliquid is really run by a very small group. It's still kind of a startup phase. It's run by 15 people out of Singapore, right? So it's not even a US company. They built this blockchain, a layer 1 that's a record-keeping system designed specifically for high transactions. Now what you're getting are exchanges and different products being built on top of Hyperliquid, and because you have such prominent people in the industry of traditional finance, right, from Barclays and NYSE, these aren't no names. These are big dogs that have connections up the wazoo. That helps solidify an exchange or DeFi marketplace like Hyperliquid as being the de facto place to go for outside of normal hours. And I think when you start to push that volume there more and more, these things grow exponentially. So that was trade. If you go here to Vault, Vault is really interesting. So click on Vault. You can see here they got these protocol vaults. So here's one that's called Systemic Strategies at Hypergrowth. And this one is made as a rate of return of 309% for the year. Actual rate of return, not hypothetical. And you can go in here and you can see all the holdings. So let me see if I can make this bigger for you. I know it's difficult to read it, but you can see their number one position is a 10x leverage Hyperliquid coin, which is up $274,000 or 45%. Their next big winner here would be SCI. They're up $11,000 on that one, 93%. And they're just using these leverage products, building a portfolio. And if I wanted to, I could connect my wallet and I could buy into this fund. I could deposit 10 grand, 50 grand, 100 grand. Right now there's $10.9 million locked into this vault, meaning anyone can buy into it. And typically what happens is the person that created the vault gets a percentage. So you might get 95% of the profits. They're keeping 5% just for having built this thing. And there's a lot of different ones you could buy into. I don't do this personally. I think it is interesting for those of you who might be looking. This is not my game. I don't like buying into products and services that others have built. I've just been burned too many times in the past, and call me jaded or whatever, but I just don't deal with them. You also have Earn. So you can take cryptocurrency here, stable coins. I could deposit these. It's USDC and USDH, but the rates of return are not very good there. And then finally you have staking. So I could take different cryptos. In this case, it's mostly going to be Hyperliquid, and I could, this is Hyperliquid staking, and I could get looks like about 2.25% to stake my Hyperliquid. So if you thought that Hyperliquid tokens, because it's going to be, the exchange is going to grow, you thought that was going to be something you held on for a long time, then just stake it into the protocol, earn an extra 2.25%. And as time goes by and price goes up, you make money there, and you're compounding this with your 2.25% rate of return. So those vaults are kind of like mutual funds that someone is managing. Correct. Yep. Exactly it. And, it might be interesting to throw a couple bucks at it, but just be careful, right? Don't go all in. I think that part of the sensationalism of this is when I see a portfolio here, I go to vaults. When I click on vaults and I scroll down, you're seeing 327% rate of return, 290% rate of return, 66, 120. I mean, these are good numbers, Everybody here would love to have a 300% rate of return. Even myself, sign me up any time for that. But, I think you just got to be careful with it. There's a lot of problems to these. And, the risk is you're dealing with smart contracts again. All in. No, Wolf, do not do that. Do not do that. I guess there's enough money here sloshing around that the price is somewhat accurate. Yeah, so what happens with the underlier? So in researching Hyperliquid, one of the things they do is every 3 seconds, it references the underlier. So there's an oracle that goes and gets the quoted price. So in this case here, let me just show you. Let's go to this one, the Dr. KMTTR, which is up 172% this year, or the past year. You go through here and you see its number one position is XMR, which is Monero, right? So every 3 seconds, it's going to go and get the price of Monero and update this every 3 seconds. So it's constantly updating it, yes. Let's see what else we got. Set the parameters and let it go, starting with a small amount. Yeah, Yeah, certainly start with a small amount, Mr. Barberino. If you're talking about your, your wife and the algorithmic trading that she's talking about, sure, go. Is Hyperliquid the company privately owned or public company? Private. It's a private company. So and this is just me because I've seen it happen so many times. I personally don't like to buy into projects or companies that are not based in the United States. I've been burned too many times with Singapore companies, with Taiwan companies, with Japan companies, with China companies, with British Virgin Island companies, because the U.S. doesn't have any jurisdiction there. So if something were to happen, you're SOL. That makes me a little bit nervous about it. Now, look, I like Hyperliquid. Don't get me wrong. I think Hyperliquid's probably going to do really well. It's hard not to do well when you have such monumental executives from every aspect of major finance, from exchanges to big banks to investment firms and central banks. I mean, they've got a board that is bulletproof, man. And I'm sure they're discussing how do we grow this bigger and bigger and bigger. They spent big money on it. So it is privately held. It's run by, I think, 15 people. So it's small, out of Singapore. I think the CEO, the guy who started it, is a Harvard grad, and he's been in the financial industry for a bit. But exactly, Wolf. Whatever you put in these things, your market is. If I lose this, am I okay with that? All right. If you and just, I would go into with the mindset of that personally. Just okay, this is 10 grand. I'm just gonna write this off. I'm gonna put it in there and say I lost it and see what happens. Because then you're not going to be disappointed if something weird happens, if it's a rug pull. I don't think you'll get a rug pull with Hyperliquid. I think that they're probably positioning themselves as the leader in the DeFi space. There's plenty. I mean, I showed you a couple. You've got, Pancake Swap. There's Uniswap, Sushi Swap. There's Thorchain. There's DYDX is another big player. You have Deribit. I mean, there's dozens of them out there. But I think that Hyperliquid is positioning itself because of its leadership and products and services is the number one. And they're growing very, very, very quickly. Oh, no insurance whatsoever, Marcia. Not at all. No. But remember, not only is there no insurance, but there's no record keeping. There's no accounting here. There's no watching. You're basically connecting your wallet, and that's it. That's all they know about you. So, if one wanted to, and again, you are responsible for whatever wrath of the Internal Revenue Service comes your way. This is on you. If you wanted to, you could, let's say, throw $10,000 in your MetaMask wallet. Okay, MetaMask wallet doesn't ask for your name, address, phone number. It just wants a private key. That's all it cares about. It doesn't know anything about you other than the private key. So now I connect my MetaMask to Deribit, and I use a VPN, and I say I'm, coming from a country that is allowed to trade this. And let's say I grow my $10,000 account into a multi-million-dollar account. Does the IRS know or have any clue that you've done that? The answer is no. Because it's all just a wallet. That's it. They don't know anything about it. And I think that this is a great thing on one hand. On the other hand, darn well the regulators and our government wants to rein that in. Because if you turn your $10,000 into multi-millions, you better darn well believe they want to tax that. Okay? Well, Dan says until you access it somehow. So if we use MetaMask as an example, and I have MetaMask on my phone, I could take my phone. Let's say I connect my MetaMask to Hyperliquid with 10 grand, and the Hyperliquid knows nothing about me other than my MetaMask address. Now, let's say I've turned it from 10 grand into $1 million. I put it back into MetaMask, and now I leave, and I go to Thailand, and I buy goods and services in Thailand with my MetaMask account, with my Ethereum. I'm not so worried about it. I believe what we're going to start to see more and more of is you will no longer have to convert your crypto back into dollars, right? I think you're going to start seeing closed loop systems where when I say closed loop systems, it means I'm going to be paying merchants with Ethereum and let them cash out how they want, right? So buy a tokenized big bear house with MetaMask, potentially, right? Real estate's not there. The timeline right now is about 10 years to see real estate get down that far, but the expectation is in 10 years, all homes will be tokenized. That'd be wild. For you realtors out there, that's going to be a totally different ballgame. All right. So yes, Big Eb, I think that they're a legitimate platform. I'm still nervous about it. The safeguards are that they are audited. They audited their smart contracts. But again, because it's DeFi, it makes me nervous. There are transaction fees here, Marcia, for Hyperliquid. And again, I think you go to settings. You can go through here and find out the information. There's a page that tells you all about their different settings. But yeah, don't have that one right here. Docs. I think it's under Docs. Let's go to Docs, and I think you go to... No, I don't know where it is right now. But yeah, there is a list of all the different costs. So they operate off a system of what's called a maker and taker fee. A maker and taker fee means if you are adding liquidity to the market, your transaction fees are less. If you are taking liquidity out of the market, your costs are normally higher. Plus, they're going to charge you a transaction fee on top of that. So there you go. Yeah, and as Steve says, if they were to convert back to U.S. dollars through a centralized exchange, then they certainly would know and ask, where did it come from? But there is a way for you if you chose to do that. I'm not. I have no issue in dealing with the IRS. I try to be above board. Anthony says, I might be wrong, but ETH differs with Bitcoin considerably in that they can increase the total amount of ETH available at any time. Technically, Ethereum is increasing by 2 ETH every 15 seconds. It's just the way that ETH is created. And Bitcoin right now is 3.125 Bitcoin created every 10 minutes. In principle, hear me out. Any cryptocurrency, including Bitcoin, could increase the number of coins or tokens available. No, let the hate begin. And everybody's like, well, Bitcoin only has 21 million. That's true. But if the community voted and 51% of the miners said we want to increase the reward, they could do it. Now, they would never do it, right? They would never do that because the integrity of Bitcoin would be gone, right? One of the main reasons Bitcoin is doing so well is this mindset, there will never be more than 21 million. If that adjusted, the whole thing falls apart. So it would never happen. Could Ethereum tomorrow say we are going to stop issuing 2 Ethereum every 15 seconds for rewards? Yeah. They could vote that through. Then you'd start to lose your proof of stake. There wouldn't be an incentive for people to be a part of the network. How could they change the Bitcoin code? So the way that would work, Big Eb, is let's say we've got 3 people. I'm simplifying the example. And way to ask that question, Big Eb, with 2 minutes left in the show. We're not even going to talk about markets today. This has been all about decentralized finance. Let's say I've got 3 people, okay? 3. And 2 people say, hey, you know what? Instead of issuing out 3.125 Bitcoin right now, we want to jump that back up to 6.25. We're going to double it, okay? Those 2 people would now modify the code, and they would implement that software. If those 2 people did it, that's a majority of the chain, meaning they would be the ones that dictated where things go. So if 51% of the miners agree, and they modify the code to do that, and then 51% of the miners implement that code, then theoretically, everybody else would move over and start using the new code. So yes, it's not modifying SHA-256 at all. That's the encryption algorithm. You're simply taking the code that is written that says here's how Bitcoin is released and created, and you're modifying that. It could be done, but it won't happen. It won't happen because the miners know that if they increase the number of Bitcoin, the value of the Bitcoin they hold will drop immediately. And not only that, but people like myself would look at the integrity of Bitcoin's network and say, I'm out of it altogether. Because the cornerstone of why I'm in it is 21 million. Scarcity. And if you modify that scarcity, that whole project is null and void in my opinion. So they would never do it, Big Eb. There's no way. Not going to happen. But in theory, it could happen, right? That's the point. It could. No way do you get enough Mag 7 earnings and news. No way. Sun could come up in the West, but not likely. Well, the world would be a messed up place if that happened. All right, let me go over an hour today. Damn you, Big Eb. It's your fault. Where the heck is trading? I have so many tabs open here today. So I did make one addition. I sold the 1250 calls on my SMR today. So you guys saw SMR was looking pretty good. It was like at 1289. I sold calls on my position. I will show that to you here so you guys can see the numbers. Hold on a second. Bam, bam. So here's the calls I sold. I sold the 1250s. I collected 19 cents premium on that. So those are the current options positions that are open. And these are the dollar cost averages, cost basis, if you will, for those respective positions. So only have those 2 open, underliers, and then I've covered calls against those just so you guys stay updated on what's going on in that portfolio. Now, from a market perspective, very interesting day, right? Crude oil is going to continue to remain volatile. You know, who knows what on earth is going to happen over in the Straits of Hormuz with Iran. I don't have the slightest idea. It's just a bad soap opera that I don't even want to be a part of. You had your 10-year yield dropping again today. My guess is if this does continue, you'll probably see it come back down to this breakout point, which is right around 4.28, and then bounce up from there, because it looks to me like that trend is pretty intact. I feel like we're poised to be setting higher highs for that 10-year, which is not going to be helpful for our real estate markets. Dollar index, a little bit of a bounce today, but not that big of a deal, basically giving back all of its losses from yesterday. For your S&P, you had a 0.53% gain, still in an overall downtrend, right? Now, I've got this. Why do I have this? Is this a 20% decline? I'm going to get rid of this line. But, that was our bounce point was expected. Now let's see if we make it back up to 67.71 or anywhere before that. If we start to drift back lower, again, 65.25 is the key number I'm looking for, close below. Once that happens, I think we're off to the races for more downside movement. And I think that will start to trigger more high volume selling. So let's see if I'm right on that one. That's why I'm keeping my short position on SPY. Your NASDAQ, 0.64% gain. Same thing, bounced off that 23,904 level. But just showing weakness, right? Ever since we made that double top, it has not had the strength, and you can see it since the beginning of February. Russell 2000 was your biggest performer for the last couple days. It was up 1.17% today. But a doji, spinning top, really just open and close right on the same price, and not much going on. It looks great, but it just feels like it's hesitating here, and you got those last 2 days with really long topping tails on it. I feel like you're going to see some downside movement here over the next day. Bitcoin, hallelujah, a little bit of a bounce, 71,140 on the futures. That was a 2.57% gain, but we're still, this yellow box isn't very valid anymore. It really is not. We've breached it, and I keep adjusting it. But bottom line is we're kind of still just sideways to slightly up trend here going back into early February. So that's a good sign. Again, my forecast is that we're going to drift over towards this blue line, and once we hit the blue line, then I think we start selling off again and moving lower. And finally, gold. Nice little reprieve there. We talked about that breaking of the hammer formation. If you follow that one, then you are long right on gold right now. It is that breakout point was 4,537. We're currently at 4,552. I did not trade the gold breakout as we talked about on the show on Monday. All right. I just got here, yes, over an hour. Earnings announcements and econ. Look, we didn't have anything really important on Monday. Yesterday we did. We had some more important stuff here, and you can see that the flash services and manufacturing numbers. Manufacturing showing some increase, but services actually declining. That's not good. And then for today, looking through, no red factories, meaning not a lot of really important stuff here for the United States, but we had crude oil inventories, which I just don't get it. This has got to be the greatest job on earth. We had 6.2 million barrels last month or last week, and we were expected to have a negative 1.3 million barrels. That means a decline. It was 7.9 million barrels? Well, we actually came out at 6.9 million total. How could you be that off? Unbelievable. Fire that person. You fired. Tomorrow, we start to get some bigger numbers. Unemployment claims come out tomorrow. You have natural gas storage, and then a plethora of FOMC members, which will be interesting. This is really kind of that first time that all of them get to speak after the announcement. Particularly looking forward to see what Moran says, but that's going to be after the market closes tomorrow. You've got Cook, Moran, Jefferson, and Barr will all be speaking tomorrow. And then on the earnings front for Thursday, come on, my earnings calendar up here. Did it switch over? Okay. Earnings calendar for tomorrow, you can see most of the stuff is international, big names, so not a lot of really important stuff here for the U.S. You have CMC, which is commercial metals. Other than that, I don't see anything here that's really that noteworthy. UEC is uranium. Was that on there? UEC? I didn't see that one. All right, well, that's going to do it for me. We are long. How much longer? We have 5 minutes over today. Do I get a 5-minute credit? Yeah, well, if they're wrong by 7 million barrels. I could understand if you're off by a couple thousand, right? I mean, I don't know. We've asked John Rowland how they calculate that, and he said it's by plane or helicopter. They go and check out it all. I don't see how you could be that far off. Big Evans, they report 6 minutes, they don't get fired. Yeah, that would probably be a wise choice. Okay, tomorrow, I think it was Dan sent in a chart that had 4 charts that this is how you predict a recession. And I'm going to break that one down and say, is this really what we look at to define what a recession is? Are all 4 of those charts very valid, or are some of them good, some of them bad, or are they all garbage? So I'll bring that one up. We'll just, I think I'll title it "How to Spot a Recession" for tomorrow's show. But Ed, thank you for the question on DeFi, on Hyperliquid. I hope I answered your question in depth. The safeguards are the same as any other DeFi exchange. They're just, making sure their smart contracts are safe, trying to gain publicity, and right now they've got connections at the exchanges around the world and politically with the banks, so I think that they'll probably do very, very well. All right, that's going to be it for me, everybody. Hope you have a fantastic remainder of your day, and I will see you on Thursday. Take care.